WIP and time management. Some of the most difficult things to, I suppose, understand in this world of marketing and advertising, but one of the most critical to get right. So, we are a business that sells time, and we must make sure that the time that we sell, we are able to recoup in as profitable manner as possible. We are also a business that incurs costs on behalf of the client with direct suppliers. So as I spoke to in cash flow and in debtors and creditors, it's really critical that we receive money on behalf of client that we have to pay to suppliers before actually paying the suppliers. Because like I said, I always remind my staff, we are not a bank, we are not a financial institution, we're a marketing agency. So we have got WIP, and WIP really is the difference between the costs that we are expecting to come in, the purchase orders that we have raised and issued to suppliers, and the physical invoices which we have received from these suppliers. So speaking to all accountants out there, as you open a job and you raise an invoice, you will have time and then you will have costs. And in this instance that I'm going to speak to, you're going to have margin on those costs. So you will raise an invoice for all purposes for 100 Rand. Of that 100 Rand, 50 Rand is internal time, so that's profitable margin, of which you obviously have to structure it in terms of our ratios, 58 to 60% staff cost ratio to deliver against that 50 Rand time. And then the balance of the 50 Rand is broken up as follows. 40 Rand is to direct suppliers with a 10 Rand markup. Okay, so let's talk the accounting entries. What you will do is you will, and let's just talk excluding any VATs and taxes for these purposes. What you will do is you will credit revenue with 100 Rand. You will credit your data with 100 Rand. You've raised the total invoice. You've brought it into your revenue. The client owes you the 100 Rand. Then what you will do, you'll raise the cost of sales for the 40 Rand, and you will raise a WIP item for the 40 Rand onto your balance sheet. Because as it stands, when you are raising this invoice, you don't necessarily know who you are going to be contracting with to get you to be able to deliver that 40 Rand for you. So instead of it going to creditors, because you don't have physical invoices yet for it, it goes to WIP. Okay, so now it sits on your WIP account. And the great thing again about Chase and Navision is that WIP is not something we tweak. It is something that the system generates as a result of opening job bags, creating invoices, creating CEs, and raising purchase orders. Okay, so we've got a number of purchase orders raised for this 40 Rand. And this 40 Rand is going to deliver against the hard cost deliverables for your client that you've charged 50 Rand for that, and then an additional 50 Rand for your staff costs. Okay, so as it stands, you've got 60 Rand margin on this job. Obviously, included in your income statement, you do, however, have the costs of the people that have to deliver against that. Okay, so it's not just that 60 Rand goes to your bottom line. Obviously, you've got to be able to deliver against that, and the allocation of staff costs is also sitting in your income statement. But let's go back to your balance sheet. So on your balance sheet, you've got 40 Rand in WIP. Now, that will be made up of a number of purchase orders. And those purchase orders would have been given to suppliers to say, Mr. Supplier, this is what I need you to deliver for me. This is what the client has signed off. Now, we've raised the cost, so it's sitting in cost of sales, but it's not sitting in creditors because you don't actually have the physical invoice yet. Now, between production accounts in my team as well as the head of creditors, they will work very closely with the production team to establish when the job is going ahead, when we have actually briefed suppliers, and when we should be in a position to start receiving the invoices from those suppliers. So we then, say for example, the job has started and we should have started receiving invoices. We will then receive that invoice, and what we will do is, you've got to remember, we don't touch the income statement now. The income statement has got the cost in it already. All we simply do, we would have debited cost of sales, we would have credited WIP on your balance sheet, so then we receive the invoice. Now what you do is you debit WIP and you credit the creditor. So on receipt of that invoice, you are not touching your income statement, because your income statement is based on the estimated profit that you should have received on this job. And it's really critical that you understand that, because what agencies often do is that they don't create that WIP leg, and they only raise the invoice when we actually receive the creditor's invoice. And often that will be in months after we've actually invoiced the client. So what is happening is you are raising a sales invoice and you're generating that revenue, but you aren't actually matching the costs. So on a month-on-month basis, your profitability is very skewed, which is why what we do with Chase and with Navision is our income statement is actually based on the estimated margin on that job. And then you raise the estimate and your creditors in your WIP, in your balance sheet, you receive the creditor's invoice, you debit WIP, you credit the creditor, and then obviously you pay the creditor. If there are any discrepancies between the estimated cost that you initially had on the job and the actual creditor's invoice that you received, that is something that we call a hard cost variance. And depending on the nature of the agency and depending on the nature of the relationship with the customer, we will either be able to bring that into our income statement if the customer so far allows for us to do that, or we actually credit the customer. And I suppose a lot of that is dependent on how there was that discrepancy. If it is as a result of a big group discount, for example, then there are many instances that we are able to keep it. If it is just as a result of the fact that we overquoted a client, then we will pass that credit back onto the client accordingly. Okay, WIP is really important. It's really critical that you are actioning it and accounting for it in that manner so that your sales and your cost of sales are matched every single month and with every single transaction. And then from the balance sheet side, you are able to ensure that your creditors' invoices are received in a timely manner and creditors are paid accordingly.